The Phoenix Scottsdale real estate market has seen an increase in supply over the last 4 to 6 weeks. But in the last 28 days, we have seen 11,845 new active listings come to the market. Now, we haven't had that many listings overall for the past 2 years. And in the last 28 days, we have seen, again, 11,845 active listings come onto the market. Now, we have talked about supply and demand many times on this channel and how because our inventory was so low, our prices were rising so fast. So now as our market is shifting and our inventory is rising, now what? Where did all these listings come from and why now? What does this mean for sellers? And are we seeing prices drop? Are there opportunities for buyers? And if so, where? Now, I want to hear from you. Are you buying or selling right now? Have you seen any of what I'm about to share? And do you want to see more? Let me know in the comments down below. So our market has literally gone from hot to cold in about the last 2 months. But in the past 2 weeks, it has literally felt like someone has slammed on the brakes. So you can see from this chart that our active supply of homes began to rise about 12 weeks ago. And then about 2 weeks ago, right here, we crossed over our inventory line for 2020. And at the same time, we hit over 6% in interest rates. So who's putting their home on the market and why? Well, you can see from this chart that 55% of the homes currently on the market are all vacant, meaning that they are new construction, rental, second homes, or flip homes. Some of these homes could be people that were primary residents and have already moved and they just haven't gotten their home sold, but that's going to be a really small percentage because that just hasn't happened in a long time. So many people in this big group of sellers right now have decided that they just don't want the home anymore. They don't want that asset. Now, if they're a flip investor, they had no intention ever of holding onto that property for any length of time. So with this shift, they are really wanting to get the home sold as soon as possible, especially with the amount of price deductions that they are seeing. These owners have a margin that they want to hit, and right now they're seeing that margin start to decline. Now, some of these people are landlords, and they decided they just no longer want to be landlords. Likely, if they've owned their home for a long time, that's not them. They are not in that camp. It's usually those people that have just become landlords. Now, I'm going to put this chart back up here because I want you to see this. So if you see down below, 18% of the homes currently on the market that are vacant, those were bought in the first half of 2022. And 5% of those were purchased in the second half of 2021. Now, some of these homes were purchased to be rentals. And with the rental market softening, just like our purchasing market, there are many owners in this camp that are wanting to cash out before they feel like they lose. Now I'm going to share this next chart that's really going to demonstrate what the new construction inventory looks like on our market and how drastically that's changed. Now, for the past 2 years, almost no new construction was put into the MLS. They just didn't need to. But with the market changing, these builders are realizing they really need to get their houses back into MLS. And they need realtors' help to help them sell their homes. But we all knew that was coming. Okay, so for new construction, in the past 10 weeks, we have seen an increase of 169% of active listings into the market. This is changing things drastically. So what cities are seeing the most new construction injected into their inventory? Let's take a look at this slide. Now, what you'll see is that Buckeye, Queen Creek, places like that are seeing the most inventory as far as new construction added into their inventory. These are the areas we've talked about in the past that have more land, more developable land, and more room to grow. But one of the top cities on the list was Scottsdale, and I wanted to take a look at that because, as we've talked about before, Scottsdale does not have a lot of land left. So why is new construction increasing in Scottsdale? Now, we do have a few developments here in the Scottsdale area, but not a lot because, like we just said, there's not a ton of land left to develop. So I wanted to take a look and I wanted to share with you my MLS. So this is showing you what homes are being looked at as developer or new construction. Now, because I know the area so well, a lot of this, I can tell you, this is out in that Rio Verde area. So what builders have done or developers have done is they've gone out and they've bought 1, 2, 3, 4, 5, sometimes 10 or more lots out there. And then they've taken a floor plan that they maybe have and they've put this floor plan on that lot. So that's what a lot of this new construction flood into the Scottsdale market looks like. I will tell you, this is the funny part. As I was looking at this right here, Arabella just starts. So Arabella is right at the corner of Bell Road and Tatum. This was a historic land sale that happened a few years ago. It was like $80 million, the highest land sale that we've ever had in Scottsdale. It had been in this family for years and years and years, and D.R. Horton bought it and is creating Arabella. Arabella has never put any of their listings into MLS. In fact, I had a client that was looking there. They were looking at the estate homes that were a little bit larger. They were on the list. I called when I knew that they were working on the models to say, when are the models going to be done? This was literally 2 months ago. They said, we're not even going to be finishing our models. We're just going to be selling it because our list is so long. Where's your client on the list? They told me, they said, effectively, you can tell them that we are sold out. So now things have changed. And now we're starting to see some of these Arabella properties coming on the market and ending up in MLS before they're complete. So then in looking at it again, all of this here, this is all out in Rio Verde. Then you get Arabella, and then you start climbing up. You've got a few more little pocket areas that are more like what we consider infill properties. That's what we see a lot of new construction in the Scottsdale area are considered infill properties. Some infill properties that are listed on MLS. And then you start to get up to a little bit high, some of the higher price points. So I want to make this distinction because some people don't realize this when they're looking in Scottsdale and they say, I want to look at a new build. There are lots still left in Scottsdale, and builders do exactly what we just talked about in Rio Verde is they go and they buy these lots and then they build a home. And so oftentimes places like Desert Mountain, Silverleaf, Troon, Mirabel, golf communities like that, that's where we have some of these that are considered new construction. They are new construction, but they're custom lot, custom home, not a tract home. These are very different than the Arabellas, like the DR Hortons that we were just talking about. So we have seen an influx of that into the Scottsdale market. But this high-end luxury new construction is usually always put into our MLS. So these specifically were not the ones that were just flooded into our market and made the Scottsdale inventory uptick when it came to new construction. I hope that explains kind of what that flood of inventory looks like when it comes to DR Horton, Pulte, Toll Brothers, builders like that versus the new construction custom type builders. It is a different animal. And I want to make sure that we just talked about that distinction. Now, if you've read any newspapers, you've heard about the Wall Street buyer canceling on a bunch of their listings, letting their earnest money go back, and all of these homes come back on the market. Well, let's take a look at what that looked like in the Phoenix market, because that did have an impact in our inventory rising. Okay, so here it is. As you can see, the pandemic shutdown, how we had a bigger spike then for canceled listings than we just did with Wall Street canceling the homes within Scottsdale. Now, I know that this Wall Street cancellation for other homes was much more affected in some other states. In the Phoenix, Scottsdale, Arizona market, it wasn't as dramatic as some of the other states that I know happen. The other thing to note here is that buyer is buying in a very specific price point. And here in the Phoenix market, they're looking at about 400 to 500,000. Okay, so we've talked about where our listings are coming from and how much that has affected our supply. So how much is it really changing our market? Let's take a look at these maps. This is a great visual. So this is just through June. So just keep that in mind. As you can see from the key down below, we have been in a hot, frenzied market, insanity for a really long time. So this was the beginning of June. And this is what the overall Valley of the Sun looked like. Now this is June 5th, and you can see some of the red start to come off. We've got some cooling going on in the market. This was just June 5th. Now June 13th, we've got more cooling, more things changing, and now we're June 20th. And you can see how much red has literally come off of this map and how much we're just in the hot range of the market. Now, I want to show that to you. And still, I just want to bring this up. We are still technically in a hot market. We are in a soft seller's market, I would say, in that hot market. But because we've been at 7 levels of insanity, this feels like we have fallen into the abyss. So why do I share all this with you if I'm telling you we're still in a hot market? Because we are in what we consider more of a soft seller's market. That hot market is really more of a soft seller's market. So sellers, it is really important for you to pay attention to this because our market is shifting, sometimes daily. The price decreases for homes that are listed on the market continue to climb, and it's important to stay ahead of that. But that does not mean that every home on the market has decreased in value. We are seeing a stabilization in the market, and what we're really seeing is that our year-over-year price appreciation at the top line is starting to flatten, which will then start to slow the rate of appreciation. And if things continue along the same lines that they are right now, this will decrease. But as you can see from the very top of this line, it has already gone flat. So now we've talked about this on my channel as well. What does it take to have prices start to come down? And that's three things. We need to see an increase in the price decreases for the list prices. We need to see an increase in days on market. We need to see an increase in the seller concessions. Now we've seen 1 and 2. We have yet to see an increase in the seller concessions. However, I do believe that is right around the corner. We have already begun to see builders offer rate buy downs and incentives for these buyers. And that means that regular sellers are going to have to start offering this too, and very soon. So buyers, where's your opportunity? Well, it's iBuyers and these flip investors. These two have been affected the most already in this slowdown and in this shift in our market. So if you really want to focus on maybe where can you get the best deal, you can focus on those two sellers as a whole. So buyers, you are much more in the driver's seat. Back to old times where you can actually negotiate for things in the contract, including the purchase price and repairs and all of the things that were normal in the contract. This is a good thing. Just remember, there are opportunities out there, which is a great thing for you as a buyer. If you found this video helpful, make sure you check out this one. I think you'll love it too. Oh yeah, and don't forget to hit that like and subscribe. It really helps out. If I can answer any other questions, please feel free to reach out. My contact information is down below. As always, I thank you for watching, and I'll see you next time.